Equity Bank has recorded a 22% increase in its interest income, rising from 69.8 billion shillings to 84.3 billion Kenya shillings, according to the half-year report presented today by the bank's chief executive officer during a meeting held at Equity Center in Upper Hill, Nairobi. The bank has also registered a 12% profit growth compared to the same period last year, largely driven by its subsidiary companies established in neighboring countries like the DRC and Rwanda. Overall, Equity has increased the value of its assets by 6%, now standing at 1.7 trillion Kenya shillings. The CEO emphasized the bank's continued commitment to serving and benefiting its customers every day.
But bank assurance is very different from when the tier 1 banks are at 13%, Equity is at 11%. 200 basis points is because of its approach towards, and if you look at net interest margin, banks are at 8, we're at 7. Despite having a lower cost of funds, at net interest margin, we're still doing poorly because of our decision, a differentiating decision that you start with your customer. You give them an umbrella when there is rain, not when there is no rain. And there's been a lot of rain over the last 2 years. A review of the yield 91 days rate has moved from 16.38 to 15.8. So essentially, our customers can look for a reduction, almost double the reduction of central bank of approximately 0.4%. So we'll see that, and that then brings in more and a great affordability.
You'll see with the pressures around interest rate, as James has mentioned, Equity has been quite considerate around what do we charge the customer, and we've intentionally lagged our interest rate to the market, as shown by that graph. You'll see back in 2023 Q1, interest rates were at 11.4%. We then deliberately, as the pressures on interest rate came through, we ensured that we lag that behind so that we get to support the customer to where the average loan interest now is at 13%.